This is the Asia Trade. I'm Paul Allen in Sydney, where the market has just opened. The top stories this hour. Asian stocks primed for further losses as investors rush from recession risks triggered by President Trump's tariff war. $2.5 trillion are raised from US equities in their worst day since 2020. The dollar tumbling with oil, while bonds gain on bets of more Fed rate cuts. The president, meanwhile, saying the market meltdown was expected, and he's open to lowering levies if other nations offer something phenomenal in return.
And I'm Sharon in Seoul, outside the Constitutional Court, which is expected to rule on the impeachment of President Yoon over his martial law decree. Security is pretty tight, and you can see protesters already out in force.
All right, well, where do we start? Let's just start here in Australia, shall we? It was a pretty rough ride yesterday, but the ASX eventually pared its losses, ending down a little less than 1%. But in the early going here, we're seeing that selling continue, following on from the steep declines we saw in the US. The ASX off right now by a third of 1%, bearing in mind we have a staggered open, so that's a pretty big move considering not that many stocks are trading just now. Take a look at Nikkei futures as well. Looks like the risk-off sentiment's going to resume in Japan as well at the get-go, currently off by about 2/3 of 1%. It was a very rough day for Japanese equities yesterday. And the yen continuing to strengthen, 145. It's a very big move. We're going to get into currencies in a moment with our first guest. The offshore yuan also showing a little bit of strength against the greenback. Okay, let's take a look at US futures. It was a horrible day for the S&P, worst since June 2020. $2.5 trillion, as I mentioned, wiped from the US stock market. Apple down 9.3%. That was the biggest single-day loss in its history. And futures not looking that great either. S&P futures trading lower to the tune of 0.25%. Crude prices are interesting as well. We did see oil already declining after the announcement of President Trump's tariffs, and then OPEC Plus delivered a 1-2 punch. Shocking markets, increasing supply by 400,000 barrels a day in May. That is about triple the expected amount. Really looking to punish members who have been breaking production limits by driving down prices further. So a double whammy there for oil. Well, President Trump is defending his tariff program despite that stock market meltdown. The president saying he believes that the economic turbulence will eventually settle. Defending trade barriers as a way for the US to negotiate.
It depends. If somebody said that we're going to give you something that's so phenomenal, as long as they're giving us something that's good. For instance, with TikTok as an example, we have a situation with TikTok where China will probably say, we'll approve a deal, but will you do something on the tariff?
All right, so let's bring in Nick Twidale now, Chief Market Analyst at ATFX, joining us right here in Sydney. Nick, I just want to get your initial reaction to what we saw there. Yields slumping, maybe reflecting growth concerns. How are you balancing the risk of recession, risk of stagflation going forward?
I mean, I think it's very real and it's very strong, especially after the updates that we got from President Trump yesterday. And I think the market's reacted accordingly and they're pricing it very strongly. It's going to be another interesting day for us across the globe and particularly in US markets today. But at the moment, I think we really are in that sort of sell dollar and there's a real flight to safety.
Yeah, well, the dollar getting hammered. Can you still think of it as a haven?
It's very difficult. I think it will come back to its haven status, and it's going to be tricky to trade over the next few sessions and probably over the next few months, to be quite honest with you. We're going to be keeping our eyes on those news wires and Bloomberg's news wires very, very sharp because of what we could get from President Trump at any time. But I think for the moment, we've got to look at probably the underlying fundamentals, and those US yields outstripped everyone else to move down last night, and that's why I think the dollar took such a tumble.
Tell us a little about the complexities of trading the dollar in this environment, because we have all these country-specific tariffs, probably country-specific negotiations. Are there any particular pairs you're watching here?
Well, I think from the majors, I think we have to look at those haven trades for yen and for Swiss, and they had huge moves yesterday, and I think we've seen 3.5% out of dollar yen in the last 18 hours. and that's a huge move even for dollar yen. I think for some of the other currencies, we're going to be trading the dollar, and you've got some FX traders now that just want to take the dollar out of the equation. So they're almost trading tariffs on a jurisdiction by jurisdiction basis. So, you know, maybe yesterday you're looking at euro sterling, which is out of the majors is probably a highlight because the UK got hit less than Europe. So probably it's more downside for euro sterling. But then across the board, looking at those crosses, particularly yen crosses and probably Swiss crosses, that's where the opportunity and probably the trends are going to come. Whereas the dollar, I feel, is going to be very volatile for the next foreseeable.
Well, in terms of yen, we heard from Goldman yesterday saying, look, yen is a good hedge against recession risk. Would you agree with that? And is there anywhere else you'd go?
Yes, I do. I think Swiss to a certain extent, but I think Switzerland's less so than the yen. And the market reacted very strongly for yen trades yesterday. It was interesting. If you looked at the initial Asian session, we actually saw the dollar increase, especially against the Aussie, the Kiwi, Euro and Sterling. And it had good moves, and then it was only really later in the day when the US markets came in that those yields got smashed, and then the dollar went with it.
The job's got a lot harder, apparently, for the Bank of Japan. What do you see being the path of policy normalisation now?
I think they have to. We know they want to hike rates, and they're keeping a very strong focus on inflation. I think some people are even throwing out May hikes. I don't think that's going to happen. Some of the major banks in Tokyo are looking at June, but really they're in the same position as every other central bank. We have to look at data, and we have to see what's coming next from President Trump. And that's the issue we've got as traders, central banks have got as administrators as well. They've got to react to what's going on in the market as well as the underlying fundamentals.
Yeah, and sticking with central banks that have a difficult path ahead, I mean, what next for the Fed? Because on the one hand, there's the inflationary impact of tariffs. On the other, growth's looking a bit shaky. So where to from here? Well,
I think they've got to be looking very closely at data. And obviously tonight we've got non-farms. That's probably one of the first ones. They've got the twin mandates of jobs and inflation. That stagflation problem is a massive issue for them, but clearly the market's now pricing in rate cuts faster and harder. But can they do that if inflation's going to remain sticky? So it's a real tough job for the Fed as well. So I don't think they're going to be appreciating Mr. Trump's moves either.
Before we let you go, I want to get your views on some of the emerging Asia currencies, which were hit pretty hard yesterday because also the tariffs on some of those nations are very strong as well.
Of course, yeah. I mean, I think they're going to remain under pressure for the foreseeable future as well. They're harder to trade because liquidity is such a massive issue. But for the short term, you've got to be looking to sell those on any rallies. And it is really about watching whether any of these deals, which President Trump is talking about, if a deal comes through for any of those jurisdictions, those trades could unwind very quickly. Once again, it's probably something you look to take the dollar out of the equation and maybe look on a jurisdiction by jurisdiction basis, even in Asia. So looking at those Asian crosses, they're trickier trades to make, but they're probably going to give you those trends.
Let's wrap it up on a local note. How about the Aussie? I mean, coming under pressure as a commodity currency, but again, against the US dollar also weakening. How do you see the Aussie performing against some other majors?
So I think the Aussie is it's been under pressure against particularly sterling and euro, and I think it's going to remain under pressure while these global growth stories are coming through. And we've actually got certainty a bit from yesterday's tariff updates. We've got that 10% across the globe, and then the reciprocals feel they're the unknown. But I think while we've got that, we know the Aussie's going to come under pressure, and probably you would look to be sell any rallies for the Aussie against euro, against sterling, and probably on other crosses as well.
All right, Nick, we'll have to leave it there, but thanks as always for joining us. That's Nick Twidale, Chief Market Analyst at ATFX. Right, let's get you some live pictures of Seoul's South Korea's Constitutional Court in Seoul. Tension there. The court due to rule in about 3 hours on the case against impeached President Yoon Suk-yeol. The verdict going to decide whether Yoon is reinstated or removed permanently from office over his short-lived martial law decree back in December. So our co-anchor Sherry Ahn is in Seoul, joins us now live. Sherry, what are we expecting today?
We are now expecting Constitutional Court to rule on the impeachment of President Yoon Suk-yeol in less than 3 hours. And we've seen the police out in force, 14,000 officers already in the capital city. And you can see why. We are seeing protesters out in force already. And we're not talking just about this early morning. They've camped out and slept here overnight. You can see protesters wearing these reflective heat blankets because of the cold. We're talking about 3 degrees Celsius Celsius or around those temperatures. Of course, much colder overnight. Over there, you can see the booths that have lined up. This is a medical booth made of NGOs of collaborating doctors and nurses to help out and volunteer if they're needed. And we're talking about these protesters here against President Yoon Suk-yeol. They want to remove him. I spoke to one of them who's come here by herself. She's saying that the president needs to be removed or there will always be the risk that he declares martial law again, that this impeachment, if rejected, will set in motion another wave of protests. And of course, we know that if the president is impeached, that would trigger snap elections within 60 days.
Yeah, well, a lot of economic issues for South Korea to confront as well, not just Trump tariffs, but what's the economic fallout of all of this political turmoil?
Yeah, you've talked about those tariffs coming from the U.S., reciprocal, on top of the 25% on auto tariffs as well. So the economic fallout from political instability has been huge, especially given the leadership vacuum. Leaders here in South Korea have been unable to negotiate with the United States. Of course, we haven't had a clear leader since the martial law declaration back in December. Now, if the president is impeached, then that sort of brings a little bit more certainty to Korean politics. The expectation is that the opposition-controlled National Assembly will be able to pass a large supplementary budget, and that fiscal boost should help the economy. The Bank of Korea could perhaps slow rate cuts and really focus on financial stability. However, if the president is not impeached and he's reinstated into power, then that could mean more uncertainty. And we've seen such a case back in 2004 when the impeachment of President Roh Moo-hyun was overturned. We have also seen the removal of President Park Geun-hye back in 2017. And we know that when that happened, I was right here as well. And those protests turned violent and we saw at least 3 deaths.
Yeah, so a lot riding on today's verdict. How could we expect markets to react depending on the outcome?
We have already seen the Korean won underperform major currencies. It's been the worst performer across Asia, down about 8% against the U.S. dollar in the past year. The expectation from Bloomberg Economics is that if President Yoon is removed, that would bring a little bit more certainty. Then that would boost the Korean won, could potentially boost the Kospi as well, could increase bond yields because of larger fiscal spending. If President Yoon remains in power, then we're talking about potential political gridlock. The Democratic Party, as I said, controls the National Assembly, so that would mean it would be difficult to pass fiscal measures, and that could hurt the economy even more.
So let's run some scenarios here. If the impeachment is upheld by the court, who could be the next leader of South Korea?
So those snap elections would take place within 60 days. Right now, the expectation is for the leader of the opposition Democratic Party to be the front runner in those elections. Jae-In has also been acquitted by the court recently on other charges of election tampering back in 2021. So we could see him become the next president of South Korea. What that means is that policies could potentially change. President Yoon Suk-yeol narrowly beat Jae-In just a couple of years ago on the platform of closer relations with the United States, also closer relations with Japan as well, and perhaps a more hardline policy against North Korea. Now, we know that usually the Liberal Democratic Party is more progressive and wants a more equal relationship with the United States. Given the U.S. tariffs right now in place in South Korea, there are some concerns that perhaps, or expectations that voters might also start doubting the relationship with the United States. What that actually means for voters when they go to the polls is a big question.
All right, Bloomberg's Sherry Ahn there in Seoul, and that court decision due in just under 3 hours' time. Coming up on the Asia Trade, the Stimson Center and Yonsei University join us to continue our discussion about the political fate of South Korea's impeached president. Plus, we talk market volatility with Standard Chartered Wealth. Much more ahead. This is Bloomberg.
taxes and deregulation were the three-legged stool, and right now the focus is on tariffs.
As things stand now, we're headed to recession. And it's very clear that this is a tax on businesses and households.
The U.S. is known for the innovation and the stuff we create, and I think it's exceedingly burdensome for small companies like ours.
In the next couple of months, the labor market still stays okay.
As the adage goes, if the U.S. is going to have a slowdown, other regions probably are going to be worse.
Some of our guests there speaking about the Trump tariffs and the fallout from President Trump's tariff barrage is being felt in China, which is struggling to get its economy on solid footing. Fitch has also downgraded its key sovereign debt rating, reflecting a diminished outlook for public finances and debt levels. For more on this, let's get to our chief North Asia correspondent, Stephen Engel in Hong Kong. So, Steve, fill us in on the China impact.
Well, first off, I have to kind of clarify that this Fitch assessment of the public debt levels and financing abilities in China was essentially assessed before this latest barrage, but also likely with the expectations because it was well telegraphed that it was coming. But essentially, Fitch cutting the sovereign debt rating of China from A+ to A, reflecting those stresses in the economy. As you rightfully said, Paul, China is trying to boost its domestic economy as a buffer, of course, to those external shocks. The finance ministry from China, they've come out with a strong rebuke, saying it was biased, this Fitch downgrade, and not reflective of reality. Fitch essentially citing they raised the fiscal deficit ratio, obviously at the NPC, the Chinese officials did, from 3% to 4%, the highest in several decades. But the augmented deficit is more in the range of 8.4% of GDP, according to this Fitch downgrade note. And that is far above what would be classified by Fitch for the A rating. So there's lots that gone into this, but really, if you look at the economists' expectations for the tariff hit to GDP, you can see that China's reaction so far from stimulus at the NPC perhaps might not be enough, because Citigroup, for one, is saying this tariff hit, cumulative of a 54%, 20 plus the 34 yesterday, on top of the existing tariffs, could hit China's growth by some 2.4%. Other banks overnight, Goldman, BNP, Societe Generale, ING, OCBC, say the hit will be between 1 to 2%. Robin Xing at Morgan Stanley, he says the U.S. tariff shock would be significantly higher and more pervasive than in 2018-2019 first Trump trade war, because of direct tariff impact and the indirect shocks to the global economy. And that could mean, according to Goldman estimates, China would need to increase fiscal spending by close to 2 trillion yuan to offset the drag on growth from these tariffs. So a lot is going to happen over the next couple of months for economic planning. The Politburo, the Communist Party's top planning body, policy planning body, meets in late April, later this month, as well as in July. That's what we have to circle the calendar to see any kind of policy response. And we're still, by the way, waiting for any kind of reciprocal or retaliation from China due to the tariffs yesterday.
There's certainly a lot of risks here, but could there potentially be some upside, some opportunities as well for China, diplomatically, economically, in a world that's kind of craving stability, civility, and predictability right now?
Well, we've all heard lots of commentary over the last 24 hours, some saying that this is the greatest gift that Trump could give Xi Jinping. It does offer a bit of an opening, because look at those, and my phone is ringing. Hold on, sorry about that. Yesterday, Trump used pretty harsh words against its allies and its adversaries on global trade, using terms like looting, pillaging, raping, and plundering. That is not going to win a lot of friends or influence people. So we even saw Liao Min, the vice finance minister, speaking at the London Stock Exchange overnight, where China was launching its first sovereign green bond, essentially hailed China's deeper integration with international markets. Trump has given room for Europe and many of its allies not to support efforts to isolate China. So that is indirectly an opening for China. And keep in mind, Xi Jinping is also about to embark on a key overseas trip later this month to key markets that were hit hard by the Trump tariffs. We're talking Cambodia, Vietnam, and Malaysia. There's an opening for him.
All right, Chief North Asia correspondent Stephen Engel there. Some of the other stories that we're following. The French President Emmanuel Macron is urging companies to pause investments in the US after President Trump announced tariffs on the European Union and other regions.
What's important is that we pause future investments or those announced in recent weeks until we've clarified things with the United States. Otherwise, what message would we send if we have major European players investing billions of euros in the American economy at a time when they are hitting us? So we need collective solidarity.
Trump on Wednesday announced a 20% tariff on EU imports. That's going to take effect on April 9. Sources say Macron also wants the European Union to consider targeting US tech and services and to make sure the EU responds with all available trade instruments. And German Chancellor Olaf Scholz, speaking in Berlin, said the EU can show it has such instruments for action and that they will be used. In a tit-for-tat move, Canada plans to impose 25% tariffs on US-made vehicles. Prime Minister Mark Carney says the tariffs will apply to the non-Canadian content of vehicles that are assembled in the US and not on the shipment of auto parts. Speaking to reporters in Ottawa, Carney called President Trump's tariffs unjustified and misguided.
Three different sets of US tariffs remain in place and will continue to pose significant threats to Canadian workers and Canadian businesses. And while they have been imposed under different premises, some things are consistent. They are all unjustified, unwarranted, and in our judgment, misguided.
And for more on how Canada plans to navigate its trade relations with the US, Foreign Minister Melanie Joly will be speaking to Bloomberg later on today. That conversation coming up at the times on your screen. We have more ahead on the Asia trade. This is Bloomberg. Just get you an alert on the Bloomberg terminal as household spending numbers for Japan for the month of February contracting a little bit less than expected, down 0.5%. The market was looking for a contraction of 0.8%. Of course, it being February, it predates all the recent drama that we've seen. For that, look no further than the yen strengthening impressively in the past 24 hours, now 146 against the greenback. Nikkei futures, meanwhile, looks like it's going to be another rough ride, off about 2% right now. The Nikkei was down 2.7% yesterday. All right, South Korea's Constitutional Court, of course, set to rule today on whether to uphold President Yoon Suk-yeol's impeachment or return him to office. The ruling is going to end a process initiated after the opposition-controlled National Assembly voted in December to suspend him from his duties. Yoon will immediately lose power if the impeachment is upheld, with an election to replace him to be held within 60 days. Well, let's get back to Seoul now and my co-anchor Sherry-Ann. Sherry.
Paul, the day is getting started here in South Korea. Yonhap now saying that the 8 judges of the Constitutional Court have now arrived at the building. Trying to use history in order to figure out how they might have voted today is quite difficult because we've had a case of a former president impeached and that impeachment being upheld and also an impeachment being overturned back in 2004. Right now, we need 6 out of 8 judges to vote to oust President Yoon for his permanent removal. 5 of them are right-leaning. 1 of them has been appointed directly by President Yoon himself. So it's quite difficult right now to figure out how they will make that decision and announcement in less than 3 hours. To try to figure out how the day could go, let's bring in Rachel Lee, Stimson Center's Korea Program Senior Fellow. Rachel, great to have you with us. Bloomberg's consensus by our analysts right now is that the impeachment will be upheld and the President Yoon will be removed. What do you think?
Thank you for having me. I think it is hard to predict how South Korea's 8-member constitutional court will rule on Yoon's fate today. Regardless of the outcome, I think we can expect a polarized South Korea. I think of immediate concern is how the losing side will react to the court ruling. Emotions are running very high on both sides, and I think there will be social unrest no matter what the outcome may be.
I was talking to a couple of protesters here besides me, and then they were saying that if the impeachment is overturned, that they would just run towards the Constitutional Court. Really try to get another Constitutional Court ruling as soon as possible. So depending on how the ruling goes, what are we expecting in terms of social cohesion here in South Korea, and what the political implications could be also for the opposition-led National Assembly?
Well, I think if the court rejects the impeachment, Yoon will be immediately reinstated, but his legitimacy will remain contested as a result of the actions that led to his impeachment. Yoon's leadership will be severely tested. He will need to win over public support for his return to the office, restore stability at home, and effectively respond to mounting economic and security pressures from the outside. Yoon will also face the formidable challenge of restoring South Korea's political standing internationally. The political turmoil over the past 4 months have taken a toll on South Korea across all fronts. And if South Korea has had a fully functioning government, I think we may have had a better response to some of the pressures from the outside and domestically too.
That's the thing, right? The leadership vacuum that South Korea is facing right now as we're getting U.S. tariffs also in place. Could that be a factor for voters if, in fact, we see a snap election triggered and we do have a presidential vote within 60 days? The fact that we have seen the ruling party wanting a closer relationship with the United States, but the opposition party actually being a little bit more skeptical of that bilateral relationship.
Well, I think from a regional dynamic point of view and the U.S. ROK alliance point of view, that certainly could be a factor. But in terms of the voters' minds, I don't know if that will figure largely in terms of what the next president will do in terms of foreign policy.
So who are the front runners right now for that potential election?
Well, so if Yoon is impeached today in just a few hours, and there is a snap election, which will have to happen within 60 days of the ruling, so early June, Lee Jae-Myung, who is the leader of the main opposition party, is the clear favorite to be the presidential candidate, again, of the main opposition party. The landscape is much more complicated for the ruling party. You have multiple people who will be in the running, but there's no clear favorite at the moment. And as of today, Lee Jae-Myung, the leader of the main opposition party, is the clear favorite to win. And according to the latest public poll, 33% of the respondents said that Lee should be elected president. And the current labor minister, Kim Moon-soo, who is the top candidate of the ruling party, he's only garnered about 9% of approval rating. So that's a big gap between 33% and 9%.
President Trump has said that he would reach out to North Korea at some point. And of course, he has reiterated that he has a very good relationship with leader Kim Jong-un. What can we expect in terms of South Korea's relations with Pyongyang?
Well, I think it depends on whether Yoon is reinstated, and if he is, whether he will double down on his existing policy toward North Korea and his existing foreign policy, or whether we get a new president, and if so, who that is. If he is Lee Jae-Myung or somebody else from the main opposition party, that person probably will be a little more inclined to talk with the North. In terms of whether there will be any substantial progress between the two Koreas, regardless of what happens with the impeachment ruling today, or whether Yoon is impeached, or whether there's a new president in place, I don't expect any meaningful progress in the relationship between the two countries, at least not until a major party congress is held in North Korea in January 2026.
Right. Rachel Lee of the Stimson Center, thank you so much for joining us today. And Paul, you can hear right now the protests gearing up. Music blasting behind me. We're about 300 meters from the Constitutional Court. Half of that distance taken up by protesters and also being barricaded by police so nobody can enter the premises and the no-fly zone around the Constitutional Court building at this point.
All right, thanks very much, Sherry. Sherry there in Tokyo, and a huge police presence. I understand about a tenth of South Korea's total police force is there for that Constitutional Court decision. We'll be continuing our coverage as well. Later, we'll be speaking to Reform Party leader Lee Jun-seok, former Trade Minister Han Koo-yeol, and AmCham Korea CEO James Kim joining us as well. President Trump says the U.S. is close to a deal to spare social media app TikTok from a ban, with multiple investors involved in discussions. Let's bring in our China correspondent Min Lo in Hong Kong. So Min, we're just 2 days away from a potential shutdown of TikTok in the U.S. Is this deal going to make it in time?
Well, Trump is saying the U.S. is close to the deal, and he doesn't seem too urgent about the deadline. He has said that he's confident he will be able to secure another extension if necessary. But we know on Wednesday he had met with Vice President J.D. Vance, who is in charge of finding a buyer before Saturday. We know that Amazon had put in a last-minute bid, but we understand from sources, though, that the top contender is still this potential joint venture between Oracle and Blackstone and some other investors, and the new investors plan to acquire a 50% stake in TikTok, leaving ByteDance with just a 20% stake in the U.S. operations of TikTok. The other 30% is being held by other existing investors. Oracle would, of course, be able to provide some sort of security guarantee over data security. And also, the algorithm, we understand, will be left in Chinese hands, will be left with ByteDance, who will then license the algorithm to the new U.S. venture. Now, a couple of hurdles still remain because it's not clear at this point whether ByteDance or the Chinese government had been involved in these talks at all, and whether Beijing will approve of this deal, although Trump has said he's willing to lower tariffs as a sweetener to encourage Beijing to take up this deal. There's also the idea that that algorithm being left in the hands of the Chinese, whether that will face opposition from U.S. lawmakers, given that the law back in 2024 had stated that China and ByteDance should not have any control over the management of that algorithm. So we'll have to see 2 days until April 5th.
Your TikTok's facing a potentially chunky bill as well out of Europe, a €500 million fine for some of its operations in Ireland. This isn't the first time it's had some trouble in Europe. What's the details here?
Yes, so we understand from sources that the Irish Data Protection Commission is expected to announce this before the end of the month, the €500 million fine for TikTok for sending European user data out to China to be accessed by Chinese engineers. This is a long investigation spanning multiple years. TikTok will likely be given a time frame to halt those unlawful data processing. But as you said, it's not the first time. Back in 2023, TikTok faced €345 million in fines for failing to properly handle children's data. But bear in mind, though, TikTok isn't the only Chinese tech company or only tech company that has faced such scrutiny, because the biggest fines handed out by that Irish Commission had been given out to Facebook and Amazon. But it certainly does add another hurdle to TikTok, which is facing that April 5th deadline to divest. And the U.S. buyers will likely inherit these thousands of lawsuits that some analysts estimate TikTok faces, and that could expose them to billions of dollars in litigation payments. And so the buyers will have to think about either maybe securing some sort of guarantee from ByteDance to pay the litigation fees, or think about pricing that into the sale price.
All right, Bloomberg's China correspondent Min Lo there. Let's get to some other tech stories we're following. Microsoft said to be pulling back on data center projects, raising concerns about demand for AI services. Sources tell us it's halted or delayed developments in several locations, including the US, UK, Australia and Indonesia. Microsoft has acknowledged making changes to its data center plans, citing the need for flexibility in its strategy. Intel shares got a boost after the information reported the company reaching a tentative deal to form a joint venture with TSMC. The report says executives from both companies have agreed that the JV will run Intel's manufacturing plants, and this confirms Bloomberg reporting that the idea was being pursued at the request of the Trump administration. We have more ahead on the Asia trade. This is Bloomberg. Well, the market meltdown due to President Trump's tariffs has hurt Japanese and US stocks the most so far. Well, let's get a preview of today's market open in Tokyo with our senior Asia stock reporter Hideyuki Sano. So, Hideyuki, wasn't a great day for the Nikkei yesterday. We're just hearing from Japan's Katsunobu Kato as well. He's concerned about the tariffs' impact on the economy. Could have a major impact on trade systems. Are we going to see another day of selling on the Nikkei?
Hi, Paul. Exactly, that's probably the most likely scenario today. At this point, the futures is pointing to the fall of about 3% at the opening. Now, investors are trying to figure out the impact of U.S. tariffs. At the moment, people seem to think that this will slash Japan's GDP by somewhere between 0.5 to 1%, most likely around 0.7%. But that's still just a ballpark figure. The problem is that the average US tariffs are going to be rising to a level unseen for more than 100 years, so people don't really know how to respond to this. So the market sentiment is extremely fragile at this point.
Is there perhaps some relief coming, though, because we're entering a time of year in Japan where there's sometimes a seasonal bounce?
Yeah, in the past, April-June quarter has been the best quarter for Japanese stocks, but then again, there's a question about whether this is a normal year. On the other hand, there's a reason to believe that there could be some buying on dips coming in the market very soon, because Japanese companies have been increasing shareholders' returns due to the country's corporate governance reforms. And just yesterday, Mitsubishi Corp announced a huge share buybacks of 1 trillion yen. And analysts expect more companies to unveil share buybacks in May when they are going to announce annual earnings. And also, if you look at dividends, the Japanese shares dividend yields are coming close to one of the highest levels in history, excluding the days just after the pandemic. So that is also likely to add support for the market. So if the market sentiment calms down a little bit, we're likely to start to see some bargain hunting. But at this point, investors are still very nervous.
All right, Bloomberg senior Asia stock reporter Hideyuki Sano there. Let's take a look at how our commodities are performing. This is another sector that's been really beaten up by President Trump's tariffs. We did see the Bloomberg Commodity Spot Index down 2.5% on the day, the worst performance since December 2022, and that is rolling on over into today as well. Copper off 3.5%. Obviously, some concerns about the global growth outlook. A double whammy for crude because OPEC Plus shocked everybody, deciding to increase supply by 400,000 barrels a day in May. That was about triple what we were anticipating. It does reflect a frustration with Saudi and some of those members that were cheating. Gold, an interesting one as well. It slipped also. That US premium for precious metals crumbling because they're now exempt from tariffs. Well, Apollo Global Management President Jim Zelter thinks the chances of a recession in the US have risen to 50% or higher after the Trump tariff rollout. And he told us the world's biggest economy risks being caught between slowing growth and rising prices.
this really can't be a surprise. The reality of the surprise is a little bit more painful for everybody to digest, but this administration was very clear during the campaign what their objective was. They really wanted to revitalize American industry. They wanted to bring back manufacturing, focus on energy, focus on industrial renaissance. And tariffs, as Amrita said, tariffs, taxes, and deregulation were the three-legged stool. And right now, the focus is on tariffs. They have been probably signaling, I know you're having Secretary Lutnick on later on this morning, but they've been signaling this was the dialogue. This is obviously a long negotiation, but again, this was part of the administration's agenda. This is what they wanted to accomplish. They've been very clear in the communication. So the pain of the announcement is being felt this morning in the market. But again, I'm not saying preaching patience and perspective, but certainly this should not be a surprise. And I think now, as we think about the big trends of the last 20, 30 years, the first of which is globalization. Globalization is not going to be like we have seen it in the past. It's a new global world order. How the U.S. manufacturing and financial base fits into that is a TBD, but certainly it's going to be one that plays out over the next several months.
I can't think of many people outside of you and the team more dialed into the C-suite in corporate America. How are they planning for the changes in the global economy that you and the team are anticipating? Are plans going ahead? Are they on hold? Are they totally derailed?
Yeah, listen, I've used the term macro paralysis because I think we came into the year, the busiest folks on Wall Street were supposed to be the M&A bankers and the ECM folks. And that has not taken place. And so the pace of broad activity in the public markets has certainly been muted. And I think this really plays into, and I've been on this show before talking about the role of public markets and the role of private markets, and not just private credit, but overall private markets. And you're going to see this be a turning point where private markets play a larger role for a lot of these corporates that are still, they have long-term plans, whether it's what's going on in technology, energy, mining, a lot of U.S. domestics. Who's going to finance this reshoring that's part of the master plan? So no doubt, I think, in C-suites and in boardrooms, there's vision, there's a desire, but the practical reality is things have come to a stop.
Apollo Global Management's Jim Zelter there speaking to Bloomberg Surveillance. We have more to come on the Asia trade. This is Bloomberg. Well, economists say that President Trump's tariffs have thrown the BOJ's policy normalization course into doubt due to the risk of domestic recession. For more, let's bring in our senior editor, Brian Fowler. So, Brian, what can we read from the tea leaves about recession risk in Japan?
Yeah, well, Paul, I think, first of all, Japan is facing something of a double blow to its economy. We're going to see an immediate impact from the duties on exports. And then there's questions about what happens in the U.S. economy, where we could well see something like stagflation, maybe not to the extent in the mid-70s, but it's definitely going to be an anemic pace of growth and sticky inflation that's going to make it a lot harder for Japanese exporters to sell into that market. And that's why we've seen expectations for a BOJ rate hike fall back quite steeply. So where once we thought May 1st might be the timing for the rate hike, and if not then, at least June or July, now, based on overnight index swaps, it's looking more like September is the earliest we can expect a rate hike. And even then, that's really basically just saying we need to wait and see what happens between now and then.
And how's Japanese consumer sentiment holding up at the moment? We just had household spending for February. The contraction wasn't as much as we expected, but is there potential for that to accelerate now?
Yeah, so it was definitely a slightly less bad result than we thought it would be, but the overall trend, if you look at the chart, shows that household spending's been really pretty weak. We had a couple of good months up until now, and then that's fallen back. So it's a question of whether wage hikes, which have been at the best in more than 30 years for the last 2 years, will actually start to feed into a gain in real wages. If that happens, we could see sentiment turn around. But I think with all these questions about the tariffs, which turned out to be a lot more dramatic than we expected them to be, we'll probably put a lid on consumption going forward. We think we're gonna hear from Governor Ueda sometime in the next couple of days in Parliament. It'll be very interesting to see what he says based on what he's seen of these tariff reports in the last day.
All right, Bloomberg senior editor Brian Fowler there. All right, we're less than 5 minutes away from the open in Japan and Seoul. Let's take a look at how futures are pointing. Not great. That's unsurprising, really. We got Nikkei futures off by about 2 3/4% at the moment. It was a rough day for the Nikkei yesterday as well, off by 2.7%. Here in Australia, meanwhile, the market raising some of its earlier losses, but we're still off by more than 1.42% at the moment. The heavyweight sectors of financials and materials in the red. S&P futures also softer. Market opens in Seoul and Tokyo coming up next. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens. And, you know, I woke up this morning thinking this is the day after, sort of wanting to make a joke about the hangover, but that kind of suggests that you had a good time the day before, right? Whereas I think everyone's just sort of continuing to grapple with the reality of this new world structure when it comes to trade.
Indeed. Also assumes the party is over.
Yeah.
I'm not sure that it is.
I don't think President Trump thinks it is.
Certainly not. And the way the futures are shaping up today as well, it's looking like it's going to be another day that is anything but dull.
We are, of course, watching for some of the latest commentary when it comes to what we've heard from President Trump. He's saying, you know, offers in terms of getting exemptions or bringing down these tariffs that were announced this week would have to be, quote, phenomenal. So we have already seen, of course, a number of nations saying that they would respond with retaliatory tariffs. But let's take a look at how we're getting underway when it comes to these markets coming online at the moment. When it comes to Japan, of course, that was really one of the hardest hit in terms of the steepest falls that we saw yesterday, and that is looking set to continue. We're seeing the Nikkei 225 at the moment off by 1.25% there. We're seeing the Topix also off by about 1.3%. These sort of meltdowns, we're expecting to kind of see the buyback, the dividend sort of environment potentially soften the blow of tariffs, but that's clearly not playing out, at least in today, in terms of getting that boost. They are some of the worst performers globally that we've seen so far in 2025. But, you know, April is the start of the new fiscal year in Japan, and traditionally the strongest quarter as well, so perhaps we'll see a little bit of a green shoot when it comes to that market. Dollar yen, they're still holding pretty steady at that 146.28 level. It's been quite interesting in terms of what we've seen when it comes to trading in the dollar. There's been some oscillations in terms of what the tariffs actually mean. The sort of conventional school of thought is that we're going to see a stronger US dollar. That's not how it's played out. We've seen the dollar dropping by the most on record. Traders kind of continuing to brace for more volatility amidst really uncertain expectations of how the Fed will progress from here. Switching out to South Korea, where of course the focus is very much on the domestic political story today. The country awaiting the court's verdict on President Yoon's impeachment. That verdict will be delivered on whether or not to permanently remove the president from office over that martial law declaration or to return him to power. So if the impeachment stands, he will be immediately removed. An election will be called and held within 60 days. If it's rejected, he will, of course, regain those presidential powers. So regardless of what that result is, Paul, it's pretty certain that we're going to see that divide when it comes to progressive and conservative voters, and we have seen, of course, tight security and amidst expectations of unrest.
Yeah, a very tense couple of hours coming in Korea, and possibly some tense few days to follow as well. Let's take a look at how we're tracking here in Australia after the first hour of trade. Yeah, unsurprising. The selling continues. We're off by 1.5% right now. Sector specific, every sector's off except consumer staples and healthcare. So I guess we're comfort eating and seeking therapies, but otherwise a lot of red on the screen there. The Aussie dollar holding pretty steady there at 63 cents, and not a lot of change in yields either. We did see the 10-year down now 58 basis points since inauguration thereabouts. It briefly dipped below 4% there as investors seek safety. So warning signals there on growth, although we did hear from the Fed's Lisa Cook earlier. She does expect slower growth this year, also stalled progress on lowering inflation, but no great deal of change in the way that the Fed is making commentary around what we've seen so far. The oil price as well, one to watch. It was sinking anyway after the tariffs announcement, and then we got that shock announcement from OPEC Plus that It's increasing supply by 400,000 barrels a day in May, and that is about triple what the market was anticipating, Heidi.
Yeah, some timing when it comes to that announcement, right? Returning more supply to the market. But at the moment, you've talked about this, the sort of depth of the sell-off when it comes to Asia, particularly when it comes to the Japanese markets. We're seeing at the moment the Topix falling 10% from that March peak as the sell-off just intensifies today, and we have just seen that impact of the stronger yen, that sharp fall in Japanese equities, and we have already seen the Nikkei 225 tumbling more than 15% from that December peak to enter a correction. Now the Topix down 10% from the March peak. Let's bring in Steve Brice. He's a CEO at Standard Chartered Wealth Solutions. So it doesn't feel like we're going to see the volatility abate anytime soon. How do you sort of progress from here? What's your take on how to navigate these markets?
Yeah, so I guess everybody's now sort of just adjusting to this, these peak tariffs that we've been seeing implemented in the US, and just trying to figure out what the next steps are, whether it's going to be retaliatory or whether we're going to see some sort of negotiations taking place. The likelihood is, of course, it's going to be a bit of both, and then the openness or willingness of the US administration to renegotiate these tariffs lower. So I guess everybody realizes this is bad for growth and good for it, and picks up inflation. So the question everybody needs to ask is, what are the scenarios from here, from a growth perspective? Is President Trump is he an idiot, or is he unconstrained? I don't believe he's either of those things. So he's clearly using this, or most likely using this as a negotiating tool to try and get a better trade agreements with different counterparties. And we're also seeing in Congress the Republicans have a voice again. So it's certainly not a majority questioning his leadership, but certain people now started asking the question as to whether this is the appropriate thing. And that leads to the point of, do we still have a Trump put? And we believe the answer to that is yes. The question is, when does that kick in? So for individual investors, with a long-term time horizon, this is where you make your money. You buy on weakness. Whether we'll see further downside, we still think we might see some further downside in the short term. But these are the great opportunities when markets go on sale for people to build long-term wealth.
Where are you buying the dip then, if you were in that scenario?
So for the S&P 500, we're actually challenging one of the key supports that we highlighted yesterday, so 5,400. So we're just marginally below that at the close last night. Next one is around 5,120. So obviously that's a decent way away. So the way we would suggest this is saying, look, we should be diversified across different asset classes, across geographies in the world as well. But if you look at the US on a standalone basis, averaging in to, from now down to those sort of levels probably makes sense, assuming we're right that Trump put is still there.
I want to take a look at the Magnificent Seven, although in this chart on the Bloomberg terminal we're now referring to it as the Lag Seven. But there's some really quality names here in bear market territory. Now, if you're willing to take a long-term view, is this the moment to get in?
So certainly, I mean, obviously we've seen valuations come off quite dramatically. So that was always the concern with these names, was that valuations are a big challenge. And now that's becoming less of a concern. They still have very strong fundamentals by and large. I think, names affiliated with Elon Musk obviously have different headwinds potentially than some of the other companies. So that's something that you have to factor into your decision-making process. But from our perspective, we are overweight tech, looking to buy the dip in the US tech sector as well, and so that would fit into this Mag 7 rebound at some point.
You're also overweight China. Now, the market there is closed today, but we saw some pretty modest declines yesterday compared to what we saw in the US. What's your outlook for China stocks?
So, I mean, we do feel that China will probably weaken a little bit in the near term. Obviously, the tariff effect, they have been pretty resilient. Obviously, the market's done very well so far this year. But we would be buying on dips there as well. We believe that the technology sector in particular is an area of key interest for us. Obviously, the DeepSeek revelation still feeding into a more bullish environment for tech sector. Valuations in China are pretty cheap still. So from that perspective, we like the Hang Seng index, buying down, maybe 3-5% lower than we are today, and the same on the tech sector as well for the Hang Seng.
Southeast Asia, emerging Asia, obviously, is part of that China Plus One strategy, were some of the hardest hit in these tariffs. Do you still see opportunities when it comes to EM in this region?
So we're underweight ASEAN. So we're overweight China, underweight ASEAN at the moment, and I think that's one of the reasons was we felt that China was probably better prepared for the tariffs than maybe ASEAN. Obviously, that China Plus One strategy was a huge boon to the region, but I think that's something that's in the crosshairs of US policy now. Obviously the formula being used by the US to determine what tariffs should be is sort of symptomatic of that, and that's why ASEAN's probably facing significant headwinds at the moment. So, yeah, it's not an area of focus for us. Obviously, value will be created through this, in our opinion, if we think that tariffs are going to be transitory, or at least not at these levels. So we're at peak tariffs, but for us, our focus is elsewhere.
Steve Brice, CIO at Standard Chartered Wealth Solutions. Great to have you with us. Well, South Korea's Constitutional Court is due to rule in about 2 hours on the case against impeached President Yoon Suk-yeol. The verdict will decide whether Yoon is reinstated or removed permanently from office over his short-lived martial law decree. Our very own co-anchor Sherry-Ann is on the ground in Seoul and joins us live. So kind of, Sherry, set the scene for us. What are you seeing? What are we expecting today?
You can hear right now the celebratory mood, at least early in the morning session. We're talking about less than 2 hours before the Constitutional Court makes a decision and announces that verdict that could mean the impeachment was upheld for President Yoon and he will be permanently removed and trigger a national election in less than 60 days, or else that impeachment could be overturned. But as you can hear right now, for the time being, it's a pretty celebratory mood. I think at one point I saw a blue bear just passed me by being called the democracy bear. So demonstrators here out in force wanting President Yoon to be impeached. At least here, we're about 300 meters from the Constitutional Court. Half of that distance is being taken away by barricades. The police are just not allowing anybody to get near the building. On other parts of this area, you can also see those demonstrators in favor of President Yoon that don't want to see him removed. But of course, we'll know in less than 2 hours.
What's been the economic fallout of the political turmoil that we've seen in South Korea?
Of course, the leadership vacuum has been detrimental for South Korea at a time when the country is also facing 25% of new reciprocal tariffs coming from the United States, 25% on auto exports already taking into effect this week. We have seen the Korean won, the worst performer across Asian currencies already in the past year. Now, what will it mean if the impeachment is upheld and President Yoon is removed? Perhaps a little bit of political stability is what Bloomberg analysts are saying, as we could see the opposition-led National Assembly passing a fiscal budget, a larger supplementary budget that could boost the economy. Perhaps the Bank of Korea could slow its rate cuts and focus more on financial stability. However, if that impeachment decision is overruled, then we could see more political gridlock. We have had both decisions in the past year in South Korea. In 2017, President Park Geun-hye was removed by the Constitutional Court. In 2004, President Roh Moo-hyun's impeachment ruling was overturned. So right now, given the economic backdrop, everybody's looking very, very closely at this decision today.
And investors paying attention too, right? What are the implications for the markets, and does it depend on who the next leader could be if Yoon is removed?
If Yoon is removed, the expectation right now is that we could see some support for the Korean won, perhaps towards the 1400 level, but Bloomberg analysts not expecting to top that level given the political backdrop. Back in 2017, when Park Geun-hye was removed, we saw a rally for the Korean won. However, given what I said on U.S. reciprocal tariffs that are affecting about 50% of exports to the United States, which account for about 20% of South Korea's total exports, perhaps that rally could be a little bit more restricted. Still, we're expecting gains for the Kospi as well as we get more clarity on the political landscape in South Korea. Bond yields could rise as well as we get more fiscal spending. Now, if that impeachment ruling is overturned, President Yoon would come back into power. Political gridlock could continue. And remember, he's still facing a separate criminal trial, which will start in just a couple of weeks. So that would just mean more uncertainty for the markets.
Bloomberg's Jae-In there, and we're already seeing broad uncertainty continuing to play out in this steep sell-off that carries through to Asia. Brad, as investors and markets continue to grapple with really, I guess it could be the new normal when it comes to U.S. trade and these tariffs that were announced by the White House just yesterday. We are now seeing the Topix bank index in particular dropping more than 5%. This comes after the broader Topix index fell 10% from the March peak as that sell-off just deepens. We've already seen, of course, the Nikkei 225 falling into correction territory, and at this point trading past the lowest since about August, which of course was when we saw that messy carry trade unwind for Japanese markets. But the sell-off at this point, Paul, really remains unabated.
Yeah, and let's take a look at how commodities are tracking as well. It was a terrible day for the commodities spot index, down 2.5%. That was the biggest slide we've seen since the end of 2022. Take a look at some of these Japanese commodity stocks. They're sinking as well. Sumitomo Metal and Mining now off by more than 3%. Those declines fairly broad-based as well. We had oil slipping, as mentioned, OPEC Plus surprising everybody with an output increase for the month of May, and even gold slipping after precious metals were exempted from tariffs, so that U.S. premium for precious metals has now unwound. We have more ahead on the Asia trade. This is Bloomberg.
It depends. If somebody said that we're going to give you something that's so phenomenal, as long as they're giving us something that's good. For instance, with TikTok as an example, we have a situation with TikTok where China will probably say, we'll approve a deal, but will you do something on the tariff?
President Trump, they're defending his tariff program despite the stock market meltdown. Trump says he believes that the economic turbulence will eventually settle, defending trade barriers as a way for the U.S. to negotiate. Well, the fallout from Trump's tariff barrage is being felt in China, which is already struggling to get its economy on solid footing. Fitch has also downgraded its key sovereign debt rating, reflecting a diminished outlook for public finances and debt levels. For more, let's bring our Chief North Asia correspondent Stephen Angle in Hong Kong. So what have we seen so far when it comes to the China impact?
Well, clearly we knew that the Chinese economy started the year struggling as it did throughout 2024. We saw some green shoots of growth as reflected in the policy response to the National People's Congress. I spent 20 of 30 days in March in China getting kind of a feel for the economy. Clearly there is room for more, stimulus if and when needed. And now that the tariff response obviously is not yet out, but the tariffs were larger than expected, you can probably expect further fiscal stimulus down the pike at some point. And this also comes hand in hand with what you just said with the Fitch downgrade from A+ to A, which, by the way, the Ministry of Finance in China has blasted a strong rebuke, saying it was biased and not reflective of reality. But Fitch also did mention this GDP fiscal ratio to GDP, which the NPC saw it go from 3% to 4% to allow more stimulus into the Chinese economy. You know, it was the first time in several decades that China had raised that debt ceiling, essentially the debt ratio, to 4%. But Fitch points out the augmented deficit ratio, a broader measure of the fiscal gap, is closer to 8.4% from the 6.4% range last year, which is far above the threshold to be classified for its sovereign debt rating of A. So, again, there's going to be some fiscal stresses in the Chinese economy, compounded, obviously, by the tariff external shocks. Citigroup, for one, saying this 54% cumulative tariff added by the Trump administration will knock off about 2.4 percentage points to GDP growth in China for this year. Goldman, BNP Paribas, Societe Generale, ING, OCBC, among others, say the hit will be between 1 to 2%. Robin Shing at Morgan Stanley is going out in a note saying U.S. tariff shock would be significantly larger this time around and more pervasive than the first trade war in 2018-2019, not only because the level of tariffs and the direct hit, but the indirect hit because it also targets other trading partners that could suppress global growth. Goldman economists also out saying China could need or would need to increase fiscal spending this year by close to 2 trillion yuan to essentially offset this tariff shock. So, you know, we're going to be circling our calendar for the Politburo meeting, which comes up later this month in Beijing, as well as another meeting in July for any policy significant policy response while we await what the Ministry of Commerce and others have said will be unspecified right now retaliation to this latest Trump tariff barrage that came out yesterday.
All right, well, that is quite the list of bad news and risks, but could there be some potential upsides to all of this for China, diplomatically and economically?
Well, you and I, Paul, have heard all the commentary, from various media, from various pundits, from a number of people saying that perhaps this tariff barrage is a greatest gift to Xi Jinping, essentially because it opens up not only an economic door, but a geopolitical door for Xi Jinping. And it's no, coincidence that Xi Jinping is going to be making a visit next or later this month to places hit hard by the Trump tariffs: Vietnam, Malaysia, Cambodia. Clearly, Beijing sees a diplomatic and economic opening. If you can't sell to the United States, sell to us, and we can also do some sort of cooperation. Even Liao Min, the vice finance minister, was in London overnight for China's first international green bond on the London Stock Exchange. He says he hailed that bond offering as China's deeper integration with international markets. So, yes, there is a bit of an opening caused by Donald Trump's tariff action. Trump has given Europe and other allies, obviously, very little incentive to back past efforts to isolate China.
Our Chief North Asia correspondent Stephen Angle there. And we are hearing now from Vietnam asking the US to postpone these tariffs. Of course, Vietnam was really one of the heaviest hit when it comes to that China Plus One strategy there. And of course, such a source of global manufacturing, particularly when it comes to textiles and shoes and the like. They're asking the US to postpone that tariff and to engage in negotiations. We've seen Vietnam, even before this, sort of trying to employ a charm offensive by slashing levies, promising to buy more big-ticket US items, but still, in the end, still very much hit as one of the worst hit out of those tariffs.
Well, let's get to some other stories that we're following. French President Emmanuel Macron urging companies to pause investments in the US after President Trump announced tariffs on the European Union and other regions.
What's important is that we pause future investments or those announced in recent weeks until we've clarified things with the United States. Otherwise, what message would we send if we have major European players investing billions of euros in the American economy at a time when they are hitting us? So we need collective solidarity.
Well, President Trump on Wednesday announced a 20% tariff on EU imports. That's going to take effect on April 9. The sources say Macron also wants the European Union to consider targeting US tech and services and to make sure the EU responds with all available trade instruments. And German Chancellor Olaf Scholz, speaking in Berlin, said the EU can show it has such instruments for action and that they will be used. More ahead on the Asia trade. This is Bloomberg.
Take a look at junk bonds at the moment. Global junk bonds suffering the worst rout since 2020 as traders flee from that space, weakening the most since March 2020 on concerns about global growth being triggered by the steepest US tariffs in a century. So this is just one way that we're seeing the markets really express that concern and uncertainty when it comes to the impact on global growth. We're also seeing debt investors just broadly growing concerned about how tariffs could affect borrowers as well. That could drive spreads higher, particularly for the more highly leveraged CCC rated companies there. So that extra yield that investors are demanding to own junk instead of treasuries widening to the highest level since August. More ahead on the Asia trade. This is Bloomberg. Take a look at how Australia is trading at the moment as we see that broad-based sell-off continuing. Aussie stocks, along with the rest of the region, retreating for a second day as investors continue to grapple with these reciprocal tariffs that have been placed on Australian goods by the US. We're seeing that decline of about 1.3 at the moment, weighing the impact of Trump's tariffs. We're seeing today financials, banks, miners, some of the biggest drags on the index. We are, though, really considering the fact that healthcare, consumer and industrials are some of the most exposed to US tariffs. That's according to analysis from Morgan Stanley strategists in a recent note. We did see the biggest decliners, though, in the session, some of those consumer stocks like Amotiv and Breville Group as well. As you can also continue to see that sort of long treasury, long sovereign bond play as a standout play to try and shield against this tariff story continues to play out quite nicely. The Aussie dollar not seeing much of a move at the moment.
Well, South Korea's Constitutional Court set to rule today on whether to uphold President Yoon Suk-yeol's impeachment or return him to office. The ruling will end a process initiated after the opposition-controlled National Assembly voted in December to suspend him from his duties. Yoon will immediately lose power if the impeachment is upheld, with an election to replace him to be held within 60 days. Let's bring in our next guest now. Jae Moon is the Underwood Distinguished Professor at Yonsei University's Department of Public Policy and Management. Professor, thanks so much for joining us today. I just want to see if you're willing to predict an outcome. What do you think is going to happen?
Well, thank you for having me. Well, eventually impeachment verdict date has arrived. It has been 111 days since the National Assembly impeachment motion was passed. Well, I guess many Koreans, including myself, keep eyes and ears open to the live breaking news on the historic and Constitutional Court's final ruling. Well, the Constitutional Court is most likely to uphold the impeachment motion, although two other possible outcomes, dismissal or rejection, cannot be entirely ruled out. Well, it is very important to pay attention to not only to the Constitutional Court's final verdict, but also to the detailed content of the ruling this morning, particularly whether the 8 judges reach a unanimous decision or are divided in their opinions on the 5 allegations forwarded by the National Assembly this morning. And I think a significant gap remains between the arguments and evidence presented by National Assembly and those put forth by the President Yoon.
So look, if there is division on the bench or if there is an unexpected decision, what's the likelihood of ongoing social unrest, and what are the risks to South Korean society?
Well, regardless of the final verdict this morning, political polarization is likely to deepen, further complicating efforts to resolve the ongoing martial law crisis. Although the partisan divide is not necessarily unique to Korea, have been observed in many democracies, they appear to have become increasingly entrenched in Korean society. I think that really concerns a lot of Korean people and politicians. the public sentiment and trust in key democratic institutions, including executive branch, National Assembly, and judiciary, have been eroded by the polarization. Well, there has been a shift from conventional ideological polarization to effective polarization, characterized by growing emotional animosity and hostility between opposing sides. This shift has reduced openness, mutual understanding, and ability to engage in constructive political discourse. And I think that's a really big homework remaining in this society.
In your view, is there a correct decision today?
Well, I hope so. Once the impeachment is upheld, and then presidential election will be held within 60 days. Hopefully, this final verdict remove and reduce the uncertainty and instability, political sense, economic sense, and social sense. So that hopefully this really help to open new chapter and really going through the dark tunnel. Well, I hope that we see the light at the end of the tunnel this morning.
Because it is a challenging time for South Korea, even with a new leadership and a fresh start away from the turmoil, right? We've seen how badly this domestic political chaos has affected the broader economy, has affected high-level diplomacy, has affected South Korean financial markets. How quickly would the country be able to move past this when the external challenges are so steep as well when it comes to Trump's tariffs?
Well, I think South Korea has struggled to establish a clear strategic stance on the crisis, as you mentioned. And it's not just the internal difficulties, but also externally imposed economic and security pressures. And there are a lot of complex geopolitical dynamics involving North Korea and China. And as you mentioned, the tariff issues. Despite these hurdles, I remain hopeful. South Korea has consistently demonstrated remarkable political, economic, and social resilience in the face of past several crises. And I believe it will do so again. And that's my hope this morning.
All right, so if the impeachment process is upheld, or the impeachment is upheld, and we do get elections within 60 days, who's the next president going to be? Are you willing to pick a front runner?
Well, according to the recent opinion polls, Mr. Jae Moon, leader of the Democratic Party, appeared to be the forerunner at this point. The recent by-election result also suggests a strong public support for the progressive bloc over the ruling party. Meanwhile, several candidates within the governing party are expected to compete for the presidential nomination, but it seems to be big support for the opposition party this time.
Jae Moon, Underwood Distinguished Professor at the Department of Public Policy and Management at Yonsei University. Really great to have you with us. And we're less than a couple of hours now away from that court's decision on the impeachment, whether that will be upheld. We'll be stepping up our coverage of South Korea's political turmoil next week too, speaking to the Reform Party leader, Lee Jung-sok, the former Trade Minister, Han Koo-yo, as well as the Amsham Korea CEO, James Kim. All of this live from our new studio in Seoul, which features state-of-the-art, high-resolution technology to support all of our media platforms. More ahead on the Asia Trade. This is Bloomberg.
Taxes and deregulation were the three-legged stool, and right now the focus is on tariffs.
As things stand now, we're headed to recession. And it's very clear that this is a tax on businesses and households.
The U.S. is known for the innovation and the stuff we create, and I think it's exceedingly burdensome for small companies like ours.
In the next couple of months, the labor market still stays okay.
As the adage goes, if the U.S. is going to have a slowdown, other regions probably are going to be worse.
Some of our guests there speaking about the impact of President Trump's tariffs. Let's take a look at how some of the key commodities we track are performing. Well, pretty much everything's down at the moment. Even gold, thanks to the evaporation of that U.S. premium due to an exemption on precious metals to the U.S. tariffs. So gold losing a little bit of ground. Crude's an interesting one as well, because not only was it hit by tariffs, we had that surprise announcement by OPEC Plus that it's going to increase production in May by 3 times more than the market was anticipating. So a 1-2 punch for oil prices there. But overall, we did see commodity prices posting their biggest one-day collective slump in more than 2 years. Those Trump tariffs are dampening the global growth outlook. Managing editor for commodities and energy in Asia, Clara Ferreira-Marquez, joins us now with more. So Clara, which commodities were hit the hardest here, and what's it telling us about the outlook for global growth?
Well, it's a pretty poor message. So if you look at your board, everything is red. That's pretty much how it looks this morning. It's concerns about growth. It's concerns about the inflationary impact. And for commodities, it's also concern about China. Remember, China is by far the largest consumer of industrial metals and of a lot of these other commodities on your board. I mean, we're looking at oil this morning. Oil is particularly grim. You have both WTI and Brent down on the back of not only, as you mentioned, the tariffs and concern about growth, but this unexpected move from OPEC overnight, pouring more production into an already very bearish picture. Copper is a really interesting one, so that's one we're keeping an eye on. We're waiting for tariff news out of the US. It was, for the moment, it was part of that list of exemptions, but we are expecting that soon. I think the big question there is this notion of a probe into critical minerals. So really very unclear what that means.
Clara, it's not just about sort of traditional commodities either, right? Do we have more clarity when it comes to what the implications are of Trump's tariffs on the energy transition, on renewables?
That's right. I mean, we're really looking across the board on commodities when it comes to the impact here. So for renewables, we're looking at solar panel exports. Remember that most of that comes from Southeast Asia, and Southeast Asia was absolutely battered yesterday. Thailand, Vietnam, Cambodia, Malaysia, really, really badly hit. And all of those are major exporters of solar panel cells into the US. So big questions there of what happens. I mean, relatively speaking, it is still cheaper than China. The tariffs are far more punitive on China, but of course, a significant increase, which is likely to affect renewable energy projects in the US. Even things like coffee. Vietnam is a major producer of Robusta, so US coffee drinkers can certainly expect a pricier cup.
Managing editor for commodities and energy in Asia, Clara Ferreira-Marquez there. Let's take a look at some of the market calls we're following today, and unsurprisingly, all of this on Trump tariffs. JP Morgan believes that the tariffs are likely to push the US and possibly the global economy into a recession this year. Chief economist Bruce Kasman is now putting that risk of a global recession at 60%, up from 40%.
And 2 of Wall Street's biggest banks have divergent views on what the Fed's going to do next. As President Trump ratchets up his trade war, UBS Global Wealth Management believes the central bank will cut interest rates 4 times this year. Morgan Stanley, though, disagrees, saying the Fed's now going to wait until next year to cut rates again due to inflation concerns. More traders do currently agree with UBS, driving bond yields down and betting on rate reductions.
Well, meanwhile, Paul, fund managers at several major firms believe that Chinese stocks can withstand the impact of US tariffs. Franklin Templeton, UBS Global Wealth Management, Aberdeen Investments and JP Morgan Asset Management seeing China as an investment opportunity, a key investment opportunity, I should say. They say a possible increase in Beijing's fiscal support, advancements in AI and an earnings recovery can all counterbalance the negative effects of tariffs.
Well, Commerce Secretary Lutnick says his teams are talking with US trading partners about President Trump's latest tariffs, but they must realize what he calls the free ride is over. Lutnick told us the world will quickly adapt to the new trade order.
Donald Trump is focused on the economic pain that the United States of America has suffered over decades. Since NAFTA, 90,000 factories, not jobs, factories, 5 million high-paying jobs gone overseas. He's focused on the U.S. worker and the U.S. economy. And what's going to happen is people are going to realize it is the great American economy that is the winner here. And anyone who doubts it, and anybody who shorts Donald Trump, or anybody who doubts the strength and the power of the American economy is making making a foolish bet. Sure, importers are going to have a tough time figuring out what to do because they went and found the cheapest production in the world. It's time to bring that production home, to have the smart, amazing people who run American companies figure it out, bring robotics back to America. And I would say that United States domestic growth is going to have the greatest resurgence ever under Donald Trump, and that's what he has set in motion yesterday.
You'll accept it takes time to engineer a supply-side response, though, sir. And in the meantime, you can see bad things happen. Do you accept that?
Well, what I can accept, of course, it takes time to build factories, but companies understand how to do it. They will do it. The United States of America is the greatest economy in the world. People have to do business with it. The rest of the world will bring down their trade barriers, and you'll see a great resurgence in our ability to sell agriculture overseas. You'll see factories being built here, and that factory production will be faster. So sure, there will be a rebalancing of those who make things in cheap labor markets, figuring out how to make them here. But ultimately speaking, and I think in much less time than you think, the world will reorder itself, will figure it out, and the United States growth rate will turbocharge compared to the rest of the world. We've been too close to them because we've been, our presidents have been presidents of the world, and Donald Trump ran on the policy that he was going to be the president of the United States, of the workers of the United States, and he was going to place American workers first. And that's what he did yesterday, and that's what everybody's feeling. Those workers have been disrespected, and now they're going to be respected.
Mr. Secretary, just a final question, if we may. Any calls scheduled for today with the Europeans? Do those negotiations start this morning immediately? Can you give us a sense of things?
Absolutely. Our teams are talking to all the great trading partners today, and we are available for our great trading partners every day. It is time for them to do deep soul searching of how they treat us poorly and how to make it right. It is time for them to do that. That is going to be difficult for them because they've taken advantage of us for so long. They should just be disappointed that the free ride is over. It's time for them to be realistic and to change the way they look at the United States of America.
U.S. Commerce Secretary Lutnick there speaking with Bloomberg surveillance anchor Jonathan Farrow. Take a look at Japan, or don't take a look at Japan if you're a little bit risk-averse, I guess. You kind of need the stomach to take a look at how steeply we're seeing this fallout just continue when it comes to Japanese stocks, which are at the moment kind of trapped between a rock and a hard place. The Topix is a highlight when it comes to the slumping the most, right? Bank stocks really picking up where they left off as the leaders of this Japan tariff-driven sell-off. It could be a while before we see that resumption of confidence, really. The Topix more broadly falling 3% as that global rout deepens. The Nikkei is down about 2%. We've seen the Topix falling 10% since that August level. We've also seen that steep decline when it comes to those banks. The Topix banks gauge pool headed for the worst two-day fall since August. We're clearly still very much in that meltdown mode.
Let's take a look at how Korean stocks are tracking as well. A bit of a double whammy for Korea, not only the country dealing with the imposition of tariffs, but look at that crowd there gathering in the vicinity of the Constitutional Court. And I say in the vicinity because there's a very large exclusion zone around there. 14,000 police officers present. That's 10% of South Korea's entire police force, all waiting on the Constitutional Court impeachment ruling. That's getting handed down in a couple of hours' time. President Yoon himself not going to be attending that, but this brings to a close 5 weeks of deliberations, and if that impeachment is upheld, President Yoon will be removed and there will be an election within 60 days, although you'd be very brave to bet that that is the end of the social unrest in Korea. More ahead of the Asia Trade. This is Bloomberg. President Trump has said the US is close to unveiling a plan to spare TikTok from a US ban, with multiple investors involved in discussions for a deal. Sources say a proposal from a consortium of US investors, including Oracle and Blackstone, has emerged as a top contender. And Trump also reiterated that he would be willing to offer tariff relief to China in exchange for Beijing's help in approving a deal. Well, Saturday's the deadline for TikTok to divest its US operations from its Chinese parent company ByteDance or face a ban. And while President Trump says, as we mentioned, close to securing that deal to keep TikTok online, Bloomberg Opinion columnist Catherine Thorbeck says Beijing will decide the app's fate in America. And she joins us now from Tokyo. So, Catherine, a flurry of recent news from Trump suggesting that deal is getting close for TikTok. But why do you say TikTok's fate is ultimately in the hands of Beijing?
Right. So as you mentioned, we've seen a lot of sort of last minute reports of interest from some big names, whether that's Amazon, Oracle, Blackstone. But at the same time, the deadline is inching closer. It's tomorrow, and we really haven't seen any sort of public details of what this deal could look like. And, Trump has come out and said that he's close, and he's really sort of promised to save the app over the past few months. But at the same time, I think it's worth remembering that even if the U.S. can sort of put together a consortium of buyers that sort of appeases the U.S. law, this U.S. ban law, I think ultimately the final say will go to Beijing because of Beijing's, export laws that they tweaked during the first sort of TikTok ban saga, that they have to okay any sort of exports of algorithms. So even if the U.S. can pull off some sort of deal here, the final word will ultimately reside in China.
What will it take for Beijing to let TikTok go to approve a sale? Is the pressure from tariffs enough?
Right. So what I think is interesting, Haidi, is that for so long, Beijing has signaled that it's fiercely opposed to any TikTok sale and that was kind of a non-starter. But over the past few months, we've really seen that sort of be flipped. And with Trump, he's promised to save the app and he's really sort of campaigned on saving the app. And now it's almost what will Trump sort of give up? And how far is he willing to go to save this app? And what's interesting is, Xi Jinping and China are really under no obligation to TikTok's 170 million U.S. users, and the app doesn't even operate in China. So I think the more Trump has come out and promised to save the app, the more he's sort of given power to Beijing and to Xi Jinping in this trade war that he started.
Yeah, and how does the escalation of the trade war impact a TikTok deal? Are we looking at a bargaining chip here?
Absolutely. And what I think is interesting is, obviously this deadline comes just days after Trump's Liberation Day blitz, when he sort of unveiled some very punishing tariffs on China. And what I think is interesting is that, he's sort of obfuscated some of the national security concerns related to the TikTok law to sort of advance his tariff agenda. And I think that sort of delegitimizes them in many people's eyes. So now we'll have to see, how serious he is about these concerns and, how serious he is about this tariff war and what he's willing to really give up on that front.
Bloomberg's Catherine Thorbeck as we watch very closely for the next developments on TikTok and obviously some of that rhetoric coming from Donald Trump that he's expecting a deal. But take a look at some of the stock markets, I should say, that are closed today for holidays, and perhaps some welcome respite for these markets, because outside of these markets, we're continuing to see really that sell-off continuing unabated. China, Hong Kong, Indonesia and Taiwan today are all closed. Morgan Stanley at the moment has flagged 30 China stocks with the highest tariff risk, so those will be ones to watch when trading does resume. But at the moment, we're also seeing a number of markets being removed from trading today, and that sort of takes out some of the liquidity as well. We are seeing those steep losses for markets that are online, including the likes of Japan, where the Topix, in particular the banks index, really continues to see further and further falls in the session. We're seeing the Nikkei 225 off by 2.3% at the moment, the Kospi off by 0.3%. South Korea is going to be key today as we wait for that court's decision, the verdict on Yoon's impeachment, whether that's upheld or whether he is returned to the presidency. We're sort of bracing for some reaction from protesters and demonstrators either way, despite some pretty tight security. We are seeing the ASX also extending the fall, 1.5%. That's being led lower by banks and miners in particular. That is it for the Asia trade. Our markets coverage continues ahead of the start of trading in some of these other major markets. This is Bloomberg.